Welcome to another one of my streams of consciousness. I remember my last video was on um, what should we do for the going into the end of last week when things fell off. I'm not sure if it's last week or before last week, guys. I'm kind of dated because I'm kind of busy outside. The market was coming off. Stocks were falling off. Crypto was falling off. It was a Monday. I said hold until Thursday, Friday before you determine what you're going to do. For those who sold, good for you guys. I sold some week before, so I didn't have the need to sell anything. I took some new positions, but coming into this week, what we're facing most in terms of our investment is pressure in terms of inflation pressure across the market. So people, the expectation of inflation is leaving, and the possibility of a hike in interest rates are leading to the outlook of depressed valuations on tech stocks, which are normally high PE ratio stocks or high valuation stocks that are driven by your required rate of return in terms of when you're doing your free cash flow valuations. So we should see that prices of these entities or whatever should fall up. But the reality is that if a company is fundamentally strong and fundamentally good, i.e. a Tesla, you don't need to be doing anything drastic. In regards to crypto, if you had entered crypto earlier this year and had positions that were diversified across a number of crypto, mainly the top three or so, probably including some exotic cryptos, you would not have been in a bad position regardless. So coming into the year, if you had positions coming into the year, you would not have been in a bad position where the market fell off. The reality is that the market has significantly spiked up and people are profiting from that. What I would say is what I've always said. When blood is in the streets, that's when Warren Buffett says, when blood is in the streets or when people are afraid, the most afraid, that's when you need to be the most brave. Or when people are the most brave and bold and buying, that's when you need to be the most afraid. And this is good psychological behavior because you want to be buying when things are cheap, people are selling, and you want to be selling things when people are buying, i.e. stocks, crypto, whatever it may be. So right now, if I had more funds and I wasn't investing the way I am, I would be buying more crypto. I'd be buying more Ether. I'm interested in Dogecoin now because of Elon Musk and the possibilities that may exist. There's a rumor now, current rumor today, a tweet from Elon. I don't know if you guys can see it on the screen here, where there's a possibility that Elon may be giving up on Bitcoin. Not sure, these things are just rumors. I've got to do some more research. But the reality is that, guys, if you have some money now, what I'd be buying into are some stocks that are under significant pressure with great future prospects. I have some outliers in terms of my assessment of what is going to happen and what is necessary to balance my portfolio coming into these inflationary pressures. Some persons are going to be looking to move into gold as a rotation until things pick up back in the tech stocks and take some of the profit and push it into gold. Some persons like myself are looking at more like kind of like value stocks where things are sturdy and stable, and depending the fluctuation in interest rate does not affect the valuation of the equity as much. So for example, some food companies, some utilities, things like that are not significantly impacted by changes in interest rates, like the tech sector, for example. But even if I'm doing a rotation, I'm not going to rotate out of my fundamentally strong picks. Whatever excess or froth or cream I have on the top, I may take some and push into these. I'm also exploring some opportunities that I think in the next 2 to 3 years are still going to be fundamentally sound investments today. So I'm still not playing the short game. I'm still not interested in playing the short game, and you shouldn't be either. You should still be looking for what you've always been looking for. Stocks to invest in, that's for the next 3 to 5 years are going to double your money. That's the reality. Never start playing the game that you're not a player in. You understand? Stick to being an investor if you're an investor, and I'm an investor. So that's what I'm seeing for the next 3 to 4 years. Position yourself and leave the money alone. Work, hustle, get some more money, put some more money together, save, invest more of your income, and without a doubt, next 3 to 5 years you'll see yourself benefiting from that. So stay strong, stay courageous in times when people are afraid, and when people are feeling bold and spendthrift, sell some stuff, take some profits, diversify, move your funds to different asset classes to just keep it safe and keep it growing. Yeah, that's it guys for now. I'll do the next video shortly on some other things I've been looking at.